welcome back. Well, the week ended 26th of July was a bullish one at the AFEX Commodities Exchange. Total value traded change week on week was up more than 200%. Michael Martins, the portfolio manager at AFEX, has the details. Hello, Michael. Good morning.
Hi, Ine. Good morning.
Good
Thank you for
morning.
having me once again. It's always
Yeah,
lovely to
another
be here.
week and another look at the AFEX market. So what drove this total value that went up more than 200%? What drove that positive movement?
Yes, thank you very much for that question. So if you look at the table in front of you, you would see that the total value of transactions that happened on the exchange in the week under consideration, it went up by 270.38% from around 0.56 billion to close the trading week at 2.06 billion. And that's largely due to the fact that there was a significant increase also in the number of contracts traded in the week under consideration, with the total number of contracts going up by 293.13% from 32,297 contracts to close the trading week at 126,972 contracts. The number of deals, however, fell slightly by 14.29% from 21 to 18. But it is the case that we had a higher value for the number of deals this week in comparison to previous week. Some of it is also reflected in the AFEX Commodities Index, which is the ACI, which went up slightly by 1.06% from 476.72 points to close the trading week at 481.75. The AFEX Export Index also went up slightly by 1.27% from 171.52 to close the trading week at 173.71. With regards to the major corporate, with regards to the number of the total value transacted on the exchange, maize went up significantly in the week under consideration from 30,000, and this is regards to the volume of contracts traded. Maize went up from 30,410 contracts to close the trading week at 125,000, at just over 125,000 contracts. Another commodity that traded higher this week was paddy rice, which traded from 3 contracts last week to close the trading week at just over 1,000 contracts. With regards to price changes on the exchange, this week was generally quiet as we didn't see a lot of price movements across board, but we did see changes with paddy rice, which went up by 12.32%, gaining 2,545 naira in the contract value to close the trading week at 23,195 naira, and also soybean, which went up by 1.40%, gaining 500 naira in the contract value to close the trading week at 36,183 naira per contract. Lastly, but certainly not least, we have the fair trade exchange traded commodity, which largely remained unchanged in the week under consideration, remaining at 16,197 naira per contract. So that's essentially all of what happened in the commodities market in the week under consideration.
All right, Michael, let's review how the commodities market performed in the second quarter and first half of the year, including factors that might have affected the market. How would you compare the performance of the first half of this year to the performance of the first half of last year?
Thank you very much, Ladi. So broadly speaking, the commodities market this year has done better than the numbers that we saw last year. So if you look at the AFEX Commodities Index, which is essentially a proxy for the commodities market, the ACI this year is already up approximately 52% thereabout, in comparison to last year, which it was up around 41% around the same time period. So that's a difference of around 11%, and that's just comparing that broadly. And some of the major commodities that have contributed to this year's performance have been maize, soybean, sorghum, and ginger, in comparison to last year, where the star performers were essentially maize, paddy rice, and ginger. And a lot of that has also been due to some of the factors that we have seen in the commodities market. So that is largely due to what we have spoken about at different points in time during the course of this show, about the seasonal dynamics that we very often see in the commodities market. And this is essentially the major factor that contributes to that price dynamics, or prices rising over an extended period of time. And so, as we always say, during harvest, when you have significant volume available in the market, prices tend to fall significantly, crashing. And then as that supply begins to dwindle over the course of an entire 9-month period for the commodities market, the prices tend to rise. Prices tend to rise as demand overshadows supply. The effect or the severity may very well be different from one season to another, but it is the case that across board, regardless of whatever commodity season that you are, prices will tend to rise for commodities over an entire 9 to 10 month period. Another factor that we also see, or that we also saw that contributed to commodities prices rising significantly this year, would also be the CBN foreign exchange policy. So sometime last year, the CBN had come up with a policy that they would essentially not make foreign exchange available to people that want to import maize and soybean. And what this essentially did was that for most people that wanted to procure commodities internationally, they were essentially forced to buy locally, increasing the amount of demand that we had for these commodities. And last, and certainly but not least, would also be the exchange rate. And this is similar to the second point. And essentially, if you look at the numbers for the exchange rate, you would notice how the exchange rate, particularly with the parallel market, which is essentially what most of these processors have access to in the first place, has essentially adjusted from around 380 to 410 to now the 500, 505 that we are seeing in the parallel market. And this essentially, like I said earlier, has forced a lot of the processors to buy locally, increasing demand significantly for commodities. So when you look at the collusion of all these three different factors, that's first of which would be the seasonal dynamics, second of all which would be the CBN foreign exchange policy, and then thirdly would be the exchange rate adjustment that has happened over the course of between last year and this year. And those are the three biggest factors that we believe have contributed to this year's price dynamics.
Okay, and I believe, when you compare last year and this year, the issue of the lockdown, restriction to business and economic activities have also made this year juicier than last year. So what about the issue of inflation and insecurity? These are things that the country have been dealing with, and of course has affected every sector of the economy. How much has it impacted commodities market, and how would it play, going forward?
Okay, thank you very much for that question. So with regards to insecurity, we believe that it has by and large had a muted effect on the commodities market. We have at different points in time spoken about the fact that most of the insecurity issues tend to happen at urban and quasi-urban areas and not necessarily the rural areas where smallholder farmers are situated. If we were to see any sort of significant effect with regards to insecurity on the commodities market, it would essentially be in two ways. And that, the first of which would be farmers' inability to cultivate or to go to the farm to cultivate, which would of course be due to the fact that there's a lot of insecurity in the area. And then secondly would also be with logistics cost, and this would be evident in the unwillingness of certain logistics companies to move to transport from one location to another, depending on what the level of insecurity is in that place. It could also be reflected in the fact that logistics prices could also rise significantly depending on what the insecurity issues are, depending with regards to the geographical location. But it is the case that when you want to compare the effect of insecurity on the commodities market, we would not necessarily see the effect of that until the next commodity season. So like I said, we haven't really seen that much of an effect this season. If we were to see any sort of effect, it would necessarily be in the next season. With regards to inflation, we have spoken about how there is a fair degree of correlation between inflation and the commodities market, and how a simple regression analysis between both would suggest that that correlation can be as high as 80 to 90% depending on the month that you're considering. But it is the case that we don't necessarily know, or we can't say with absolute certainty what the direction of causation is, whether or not it's the commodities market that feeds into the inflation rate, or whether or not it's the inflation rate that contributes significantly to what is going on in the commodities market. But this is what we do know. Insofar as there are certain commodities that are part of the food inflation numbers, and we know that largely what is driven inflation this year is food inflation, we know that the commodities market contributes significantly to the inflation rate. And with regards to some of the other elements in the inflation numbers, and that would be the core inflation, we know that that also significantly corresponds to now some of the prices and changes that you see in the commodities market. But more strongly with regards to next season, what we see, or what we expect to see as some sort of effect of inflation on the commodities market would essentially be on production production levels. All right, so we have spoken about how input cost or production cost for this year, which of course is essentially inputs, have sort of doubled in comparison to last year. And this is essentially important because input cost or production costs tend to feed significantly into the price levels that commodities start at harvest, right? So moving forward over the course of the third quarter to the fourth quarter, we would essentially be seeing the effect of inflation on price levels.
All right, Michael, what does AFEX have planned for the market this quarter?
So, I mean, in between the third quarter and the fourth quarter, there are essentially two major things that we're trying to do. The third thing would, the first thing would essentially be market education, and this is of course in contribution to what we are currently doing through this show, which is us essentially educating the market on the opportunities that are available in the commodities market, the dynamics of the commodities market, so that every single person and every single participant is sort of aware of the opportunities that they can take advantage of in the commodities market, and that's regards to market education. So we are doing a lot of road shows, we are doing a lot of seminars, webinars, and programs to sort of get people up to speed about what the commodities market is about. Secondly, would also be the launch of financial market products. An array and a flurry of financial market products will be made available in the fourth quarter of the year, and this would range from spot contracts to fixed income notes, to asset-backed commercial papers, and also with trade finance notes. And depending on the kind of participants that you are, these are, as we always advocate, is usually the best time to get into the commodities market, particularly with spot contracts, because that's essentially when prices are lowest, and then you can take advantage and ride those prices over the course of an entire commodity season. For people that are into exports too, they can essentially take advantage of trade finance notes, and then for processors that are also looking to raise money from the financial market, they can also take advantage of the asset-backed commercial paper program, which we have demonstrated to be extremely successful. So those two things would essentially be what AFEX is trying to do in the third and fourth quarter of the year, which would essentially be market education, and then also making financial products available so that people can participate in the commodities market.
All right, Michael, a lot of information always coming from AFEX commodities market, and but I think you forgot to mention where we can go to for more information.
So like I always say, if you want to know more about the commodities market, our website is always available. It's www.afexnigeria.com. And if you want to get started actually trading commodities, or even if you want to get started learning about the commodities market or how to trade spot contracts, you can always download our app, which is available on iOS and Android. And there will be somebody to take you through the process of how to begin, and then how to start investing, and then how to essentially make money from the commodities market.
All right, Michael, thank you so much. And I hope by next week when you come, we'll talk about the fact that the harvest season is upon us, and the plans that AFEX has. Well, thank you so much for the much of information that you've given us today, and enjoy the rest of your day.
You're welcome. Have a wonderful day.
And you too.